So guys, I hope that those of you who traded today on expiry day, you made some money. I was able to make some money, of course. I will talk about that, how I did and what kind of the day was. But there is one topic that I thought I will discuss definitely before getting to today. And the topic is about the return expectation on expiry day. Now, this is something which I think that there is a lot of misconception regarding the return expectation. And this video probably will be a good idea for me to just clarify that. So I had a conversation last week with a trader, and I was discussing that even if you can generate, let's say 0.5% of your capital on expiry day, that will be a good return. But the sense that I got from not just from that trader, but from several other traders that I talked to, is that 0.5% is a very low return on capital and probably not even worth spending time. But just think about it for a second, right? We are talking about 0.5% of your capital in one day, right? So this is every Thursday you are spending X amount of time. And if you say that there are about, let's say 50 trading sessions in a year, 52 or 50, whatever, on an average, you can generate about 20 to 25% returns on your capital in 1 year. And this is just one strategy, right? It's not like this is the only thing that you would do. You will figure out something else for the other days, for price action based strategies or whatever other strategies that you are interested in. So, I mean, for one strategy to make 20 to 25% of the returns of your capital, I don't think that's very shabby, right? Now, so the problem that I see that a lot of people have is that they don't consider this kind of return very admirable. So what they do is that they go for bigger returns. So some of you guys are trying for 2%, some of you guys are trying for 3%. But the problem is that every time you are going to increase your returns, you are basically getting closer and closer to at the money options. And at the money, by the very nature, those of you who understand option Greeks, is that they are much more prone to the price changes of the underlying, right? So for example, right now, if market is currently at 16,929, means 16,900, for example, right? So if you are trading that strike price, any change in Nifty is going to reflect very quickly on that options price. And that is the reason why when there is a bigger swing in the underlying, then easily the stop losses can get hit. And that is the reason why people who are getting a little bit ambitious about generating a bigger return, 2%, 3% or even higher, they in fact end up taking a loss, right? Because they're not able to manage their risk. And then at some point of time when they realize that, the losses are going out of control, they have to get out. So my advice is that, build a better perspective about this strategy. It's a good strategy. It's a very solid strategy, but you cannot put a lot of burden on one strategy, right? If you just keep pressurizing one strategy to make you money for the whole year, then it's like, you're killing a golden goose. Don't get greedy. That's basically what I would like to say. Just don't get greedy. Even if you're getting a consistent return of 0.5%, I think it's a very, very good return to target. Now, again, it's completely dependent on person to person. For me, I sometimes get a little aggressive. I can generate more. Sometimes I can even generate 2%. And then there are days where I don't have any conviction. I generate basically 0.5% to 1%. Whatever is the case, as long as I'm in profit, I'm happy. So speaking of that, let's talk about today. So today was a very straightforward kind of a day. I don't think a lot of, there was not a lot of volatility. Basically, the market just kept going up and up. There was a little bit of a volatility towards the end where market came down and then it kind of went back up. And that, took some of my profit away. But on and all, very simple kind of a day. I tried selling some call options in the morning just to see if I can make some money. But then very quickly market started to move up. So my stop loss got hit for the call option. And throughout the day, this is how the P&L was fluctuating. I think I underestimated the bullishness in the market. And that's the reason why I just kept selling call options, which as you can see, did not end up very well. So that is one of the struggles we always have, right? So that you follow a system versus follow your view. Views are much more susceptible to your biases, and that's basically what I paid a price for. But on and all, as you can see, it was a good day. There was not much to it. It's just that market came very close to a key resistance, around 17,000. It's like a psychological resistance that we will see We will have to see whether that will be crossed or not. But today was, I don't think, was a very hard day for people. If in fact myself, I am a little preoccupied with my own other backtesting and strategies and such. So I'm not getting too ambitious about my expiry days as of now, because my plan is to set myself up with a fully automated algorithmic trading, which hopefully happens soon, sooner than later. But I mean, I did everything manually today. Today was not any algos or anything, but just basically just followed the price. So that's basically it, guys. So I will just quickly remind that to not get too aggressive on one strategy, right? Don't try to go too close to at the money, because the more greedy that you will get, the higher are the risk that you will take a big loss. And not every day is going to be as charitable as today, right? So please keep that in mind for your further expiry day trading.